Okay, so today I'm going to be talking about the Q1 2025 earnings report for Ardelyx. And you can probably hear in my voice, I am very, very frustrated about this because I've been an Ardelyx supporter for a couple of years now at least. But I think with this earnings call, I've finally come around to realize that this stock just isn't going to recover. I've always thought it could reach and surpass the heights that it was before, but as I'm going to go through in this video, I just can't see that opportunity anymore. Without some real blue sky thinking here, I don't think we're going to see double digits again. So let's get straight into it and look at the crux of the problem. We can go to revenue streams here, let's show revenues, and we can see the massive drop off here for Xphozah. And in many ways, this was expected. This is the quarter we were all looking forward to see what happened to Xphozah. And in some ways, it wasn't too bad. It fell by 60%, which is what was expected. 60% Medicare, Medicaid, and 40% non-Medicare. So in some ways that was expected, but I'm going to go into that in a bit more detail later. But here was the big shocker to me. This was Ibisrela. That fell from 53 million down to 44 million. It fell 9 million in one quarter. That was an absolute shocker for me. Now, this is the adjustment quarter. So some people have been saying that, oh, this is expected, it's an adjustment quarter. But the big thing is they've doubled their sales team. They're investing in marketing and advertising. They're spending huge amounts of money, and they have not managed to make this money work for them. They keep telling us how important these medications are, but it seems to be costing just as much money to convince people to use it as it is that they receive from the drugs. So if we take a look at the financials here by going to links, financials, I'm going to change that to quarterly here. And then this is the big thing this quarter. So we scroll down to net income. Check that out, $41 million loss. Oh my God, every time I see it, I'm just like, oh, this is nuts. I mean, I was such a strong supporter of Ardelyx, but there's just no supporting it now. I mean, this is shockingly bad. You can look over the last 2 years. It's not been this bad. It's not been anywhere near this bad. I mean, they've lost, what, over $10 million, $13 million more than the worst quarter in the last 2 years. And this is with their blockbuster drug. I mean, there's just simply no justifying this anymore. I can't, I'm getting angry talking about it. So what's really become clear here is that they are just not in control of the spending for this company. They're spending huge amounts of money, they're doing big share compensation schemes, but they're just not getting a return on that investment. So if we go back to Ticketaco and revenue streams, what I wanted to talk to you about is this Xphozah drop. So Xphozah drops from 57 million to 23 million. So I've prepared a Google Sheet here, and we can see we have the 57.1 and the 23.4, and we can see here is about 41%, which on the surface looks quite good. But if we go back to Ticketaco, we go to links, and then we can go to earnings calls, and then this is the earnings call. I'm going to type in 3.8. So this is really significant. Basically, they recorded 23.4 million this quarter, but that includes a one-time $3.8 million release of returns reserve. Now, I think this is incredibly misleading. Basically, they didn't get $23.4 million in this quarter. Instead, they got 19.6. So if we go back to the Google spreadsheet and we change that 23.4 to 19.6, we can see it changes to 34%. So they didn't get that promised 40%. And it looks like they did an accounting trick to fool the shareholders into thinking that they had. And then they added that small part into the earnings call so that they aren't legally liable. And on top of that, what they've admitted is that they should have also had growth in that quarter. Xphozah isn't seasonal. So if we take a look at what they've earned so far, which is around $20 million, and then we go and check in Ticketaco for the revenue streams, we can see here that Xphozah has 1, 2, 3, 4, 5, 6 quarters. Let's say the first quarter doesn't count because it wasn't a full quarter. That leaves us with 5 quarters. So if we go back to the spreadsheet, so the 20 million here divided by 5 would be $4 million per quarter growth. That's what they've seen so far from Xphozah. So if we take away the $4 million growth they should have had this quarter, then that leaves them with around $16 million. And now the percentage is 28. And this is a much truer representation of the percentage of the Xphozah market that they're now going to get, 28%. So if they are confident that they are going to reach that 750,000, why haven't they given us a plan of how they're going to get there instead of trying to hide the numbers? This has made me completely lose faith in this management. You can probably hear how frustrated I am, but I'm sure a lot of the investors feel the same way at the moment. And unfortunately, it doesn't get much better from there, because they're also saying they're confident they're going to hit their target of between $240 and $250 million for Ibis-Rela. However, even at the top end, that's less than $100 million growth in 1 year. So if we break down $100 million growth per year, we end up with around $6.2 million growth per quarter. And then we're going to have $4 million growth for Xphozah. And then we can take the sum of those two and times by 0.7. And then that will give us the net profit for Ibis-Rela and Xphozah. And let's assume from product supply and China, they can get $3 million growth per quarter. That brings us to just over $10 million per quarter. Okay, so this is important. This is what's going to go into my discounted cash flow. So if we go to my discounted cash flow, and this is how it was last time I showed it to you. And I was predicting a value of $3.8 billion for this company. But if we now change that to 160, we can see here that it's dropped down to $2.7 billion for this company. Now, in some ways, this is a good thing because it does mean that the company is still undervalued. It's now sat at less than $1 billion. However, the thing that concerns me is that when I was first talking about this company, we were talking $30 to $40 per share. And that was a fairly common perspective from a lot of investors. And the truth of this number here is that we're never going to see double digits again. And I think that's now the reality that we have to face with this company. And that's including a rather generous $3 million per quarter from China and product supply. If instead we were to say there's only $1 billion growth from product supply in China, then that takes us down to about $8 million per quarter. I'm just going to use a calculator to go 8 times 16. That's $128 million growth per year. And we can see that it drops down to just over $2 billion market cap for this company. So for me, I'm very disappointed that this company has fallen so far. It looked very promising indeed, but it's just not going to reach those heights that I once wished it would. After today's drop, there may well be some skin left on the bone, but given management's propensity to obscure important information, it's a risky game to see what might be in the quarters ahead. Of course, there are still the old favourites that could turn this company around. They could find a new molecule that really aligns with them, and they also have the possibility of sorting out the CMS issue at some point. And at that point, I'd have to reassess the value of this company again. But for now, I'm sad to say that Ardelyx isn't even in my top 5 companies anymore. And with a $41 million loss per quarter, probably not even my top 10. I hope that they can turn things around, but recently it's just been one piece of bad news after another. I hope all the investors out there have been doing okay today, and good luck if you're still invested.